Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we are diving into a Form 8K filed by STONERIDGE, and let me tell you, this one has more twists and turns than a mountain road, but hopefully a smoother ride for the company than it had last year. This report is dated February 26, 2025, so it's pretty fresh off the press. A Form 8K is a current report company's file to announce major events, so let's see what's been going on at STONERIDGE. First up, we've got the announcement of their financial results for the fourth quarter and the entire year of 2024. They put out a press release and will be hosting a conference call to discuss the numbers. You can find all the details in Exhibit 99.1, their press release. Now, this is where it gets a little technical. They're using what are called non-GAAP financial measures. GAAP stands for Generally Accepted Accounting Principles, which are the standard rules for how companies report their finances. Non-GAAP measures are extra calculations companies use to give a potentially clearer picture of their performance, but they aren't necessarily the complete picture. These measures include things like adjusted sales, adjusted gross profit, adjusted operating income, EBITDA, which is a measure of earnings before certain expenses, and more. Why are they using these non-GAAP measures? Well, management thinks they help investors understand how the company is doing by getting rid of one-time or unusual items in 2024 and 2023. For example, in 2024, these special items include costs to fix environmental problems, business realignment costs, and adjustments related to how they handle their debt. In 2023, the adjustments involved sales from spot purchase recoveries, gains from selling assets, tax credits, and other costs. Essentially, they're trying to show how the core business is performing without these distractions. The company is cautioning us. These non-GAAP numbers shouldn't be the only thing you look at. You should use standard GAAP measures for comparison. It's like saying, here's the cake with and without the frosting. You should look at both to decide if you like it. Now we have something about Regulation FD, which stands for Fair Disclosure. This basically says that the information they shared in the press release about their financial results is also included in this report. This is to ensure everyone has equal access to the information at the same time. There's also a legal disclaimer that says this report isn't officially filed for certain legal purposes, and it shouldn't be automatically included in other filings. It also reminds everyone that some statements in the report are forward-looking, meaning they're predictions about the future, which could be wrong, and they are also including a warning. Finally, we have a list of exhibits, which are documents attached to the report. Exhibit 99.1 is the press release we talked about, and Exhibit 99.2 is the presentation they will use during their earnings conference call. This presentation could give us even more insight into the numbers. The report is signed by Matthew Horvath, the Chief Financial Officer and Treasurer, essentially the person in charge of the company's finances. Alright, let's dig a little deeper into what this all means. Since the filing focuses on financial results, let's look at some key numbers from a previous report. While this 8K itself doesn't have specific financial numbers, the mention of non-GAAP measures and the conference call presentation hints at some complexities. Let's assume from the previous quarters that STONERIDGE is working to improve its profitability by cutting costs and focusing on its most promising product lines. The adjustments they're making to their financial reporting suggest they're trying to show investors a clearer picture of this progress. Now let's put this all together and offer our opinion on STONERIDGE. It seems STONERIDGE is trying to show investors that the company is on the right track, even though past results may have been messy. The use of adjusted numbers suggests they want investors to focus on core performance rather than one-time events. However, it's important to remember that adjusted numbers are just one piece of the puzzle. Investors should always look at the standard GAAP numbers as well. One potential risk is that STONERIDGE is relying too much on these adjusted numbers to paint a rosy picture. If the underlying business isn't actually improving, these adjustments could become misleading. On the other hand, if the company is truly turning things around, this could be an opportunity for investors who are willing to look past the noise and see the underlying value. In conclusion, STONERIDGE appears to be a company in transition. They are focusing on improvements and presenting their financial results in a way that highlights this. Whether or not this is a good investment depends on whether you believe they can continue to execute their strategy and deliver on their promises. Thanks for watching. If you enjoyed, please subscribe, like, and comment.